Eric Mother.com. Just wanted to revisit this discussion on DUG, which at the moment here seems to be failing to hold above the previous weekly closing high. So yesterday it was trading above 86.08. Right now we are seeing the stock come off those levels, and so this is becoming a failed breakout. So the question was, what was one to do after this failed breakout? So generally speaking, it depends on your entry. If you are trying to play the breakout, or if you bought the stock above 86.08, then of course you have to have considered a stop once it started failing, or get out once it moves back below 86.08. Now the one thing I did not mention is we have been playing this over a period of time. In fact, if we go back to the monthly, our initial entry was when the stock moved above 76. So once it moved above 76, it was a buy. And we had a nice one there because it moved from 76 and shot up to about 100. And we got out about 100. And I'll show you why, because if you take a look at the hourly, you'll see that once it hit 100 here, you can see that that also happened to correspond nicely with an improvement in the price while the RSI was making a lower low. So at that point, we decided that was time to take some profits off the table. And then we did try and time it on a re-entry recently around here. So it was about between 77 and 80. The reason being that it had come back to test this entry level here. So there was a breakout, and this breakout began here in December from about 50, let's call it higher 50s to the highs here in 100. That's a big gain in a couple of weeks. And so we had drawn a line from here. You see that the stock had come back to test this level with what seemed like a double bottom, and that's why we re-entered the position here at about, let's call it between 77 and 80. So this recent move and attempt to break out was taking place while we already were in the position. Also, if you take a look at the hourly right now, one of the things that was concerning yesterday as the stock was trying to break out was the fact it was coming back to test a previous break level. So if you draw a line there, you can see that since this break, since this trend line break there, so the trend line break here, and for a slight pullback, ever since then the market came back and hit that with uniform activity for the actual highs there. That was another reason why we got out above 100. And also we can see here yesterday it hit this level here and was also pulling back. So lots of reasons yesterday to have been a little bit skeptical as the market was setting up maybe to pull this one lower. And so the failed breakout now, the question and the answer is, one can get out, could have gotten out, or also one could have at least considered whether to hold. If you got your entry between 77 and 80, you can still give it a chance to see whether it moves higher. Otherwise, the problem now is that you have a failed weekly breakout, and failed weekly breakouts are notorious for taking stocks lower. So that's the problem here, is that the backdrop is right now we have a failed weekly breakout. Maybe down the road it might try again, but for now, faced with this breakout that is failing, chances are the stock is still going to be under some downside pressure. Eric Mother.com. As always, good luck, peace, and blessings. I am out. Woo!